In this video, guys, let's talk tactics. Should you wait for the flush or go all in now? Stick around. Hey guys, warm welcome to you. Thanks for joining me. All right, so this is a tactical discussion, if you like, tactical topic. I'm interested to hear your thoughts, actually, guys, in the comment section below. All right, so you got the scenario. And I find myself often in a scenario recently, actually, very often, if I'm day trading the NQ, I can sometimes have this internal dialogue going on of, okay, I'm at a level where I'm pretty confident we're going to bounce from, or I'm prepared to take a trade anyway, regardless of whether it's going to happen or not. But just wait for this flush. And I find myself watching it, and say, well, I'll wait for the flush, and sometimes I wait for the flush, it doesn't come. Sometimes I might go in early and the flush happens, and I've been working myself on trying to decipher some of the conditions that I think I should wait for the flush and go into the trade or not. Anyway, I'm getting ahead of myself here, guys. Let's just talk about what I mean by the flush and going all in now. What do I mean by this problem, this challenge? I'm going to share with you some of my ideas and thoughts of kind of getting over it. And it's not specifically just for day traders. I'm just using that as an example. All right, so you've got a market here now. You've got a low, and you want to buy this support level. So whatever kind of reason you've got for buying that support level, you've come up with the idea. And for me, if I'm day trading, maybe that's around lunchtime-ish. Let's say this zone here is, lunchtime, so I'm not expecting any specific volume increase. It was an early low, we're in an uptrend. Kind of bread and butter stuff, right? Pushes through lows, flushes out everybody, and goes to high, or holds at lows and pushes back up to a midpoint. Pretty standard mean reversion type trade in an uptrend. Yeah, classical stuff. So, but the decision is always, now if I believe this level's going to hold, should I just buy at that level and hope it holds, or should I wait for a flush? And what I mean by this is, what I mean by wait for a flush is this. So imagine this is our level. Price comes lower to it. It's either going to do this and bounce off, or it's going to do this potentially and then bounce off, or it could just go lower. Now, of course, if it just goes lower, finding going to get stopped out. So it's either one or two. And those are the two kind of things I think about in my mind. I'm like, okay, which one is it? Now, in a perfect world, I prefer two. And you guys know exactly that this is fundamental to many of the strategies, and the entry trigger is based on this. And why? Because you've got an obvious place for your stop. You see the flush, you wait for the flush to end. If you're good at reading tape, which I feel like I have a good edge doing that, I'm not an expert by any means, but I feel like it's definitely one of my edges. In the short term, you can spot the kind of exhaustion move, pull the trigger, and you can time it and kind of look to try to get on in this sort of area here. But forget about that for now. Even if you're not, and you're kind of just using a strategic approach, or if you're improving that skill set, should I say, you still can go, right, I've pushed back up, I've got an obvious place for my stop. Regardless of how you time it, the obvious place for the stop is, well, I don't want it to go back through the flush lows. If I believe that was a flush, it shouldn't revisit the flush, right? It makes perfect sense. And so when you see that, now you can frame the risk reward of the deal. You say, okay, right, there's my risk, and there's my reward here, whatever that is, that's 3R or 4R, whatever. Great, I'll take that trade. It makes sense. The VWAP is up there, the open's up there. I've got a target from a day trading perspective. Fine, I can do that all day, every day. And I like those, I prefer those. But in the real world, and especially at the moment, and this is kind of, maybe there's a different topic about summer trading and quiet trading, we have these bouts of volatility, compression of volatility, and contraction, etc., expansion and contraction of volatility. And so sometimes you just get this, where the price comes down, tests the low, and just bounces off. And so you've got a commercial decision to make here. Do you buy the low, or buy this support level and look for the bounce off that? Or do you buy the support level and have to sit through a flush? Because if you buy the support level, you can't really have an arbitrary stop a few ticks under. You can, but at the same time, that's still a buy. If you think that either of those are bullish enough to buy, then if you're buying here, you've got to expect that it could do that. So the challenge then becomes, well, where the heck do you put your stop? If you're buying there, if you put your stop just under that low, you're going to get pinged out when actually it's still a valid long, because it could just flush through, pull back up, and then you're long. Now, do you then take it again? But then if you start doing the same thing and getting caught out multiple times these flushes, you're losing, and you're only just going to get your money back when you get the winner. It's not really the right thing to do. I don't feel it is. So what do you do? So you either say, okay, I'll take the buy there and I'll have a wide stop and I'll allow myself to sit through the flush. Once the flush happens, I'll come back up and put a stop. Now, that's one way of doing it. The downside is you don't know where the flush is. You also don't know if it is a flush and it's going to break. It could just break through. So you've got to have a stop in some way. You can't just sit through it because volatility could suddenly, expand. You can just suddenly have a breakout and the thing just falls through the floor. News, just normal market conditions, and you're just stuffed because you're long and you're giving it some room. And now it's no longer a flush. It's a breakout. It's pushing to lows, multi-day lows, and you're absolutely wiped out of the game. Not the game, but you've got devastation to that trade. So you've got to put a stop somewhere. So then you go, where do I put it? Do I put it wide? Do I put this? Problem is, of course, when you put it reasonably wide to try and avoid the flush, you gauge it and go, where's the flush could be? Oh, I think it's going to be 30 points lower, whatever. You go, okay, well, I'll put myself a 40-point stop. All of a sudden, the risk-reward ratio of the trade looks poor because you're only looking for maybe 50 points bounce off that level. So you think, well, this isn't really the trade I want to take. So you kind of got this is where you have this dilemma. Do you take the trade? Do you not? Now, for me, I don't want to do that. I have decided that if I'm going to take that trade there, I'm not going to sit through a flush. I'm going to say to myself, these are the conditions that I think they are. I don't think we've got enough for us to have a reasonable flush in this. I'm not going to sit through it. Or the flip side is I will split my order up and I'll say, okay, I'll do half a trade here. I'll have half a trade, I'll buy on the flush, and then I'll come out of the whole lot. Now, that's not perfect because if the trade goes your favor in half a position size, and if the trade goes against you, probably in a full position size, there's no right or wrong here. But I think the point is how we determine the different market conditions to decide whether to buy on that support or wait for the flush. Now, for me, it's if we've got some volatility, some range expansion, some indication during the day there's some volume coming in, I'm always going to lean on that. I'm always going to look for that because that's always my preferred. 80% of the time I want to be taking that because of the structure of the trade. I think it's a better trade. I think from a price action perspective it's better. It gives us a little bit of a glimpse of who's in control, etc., etc., etc. So I'm always going to look to wait for that. But if the conditions are quiet, if it's a slow day, if it's not quite as volatile as we'd like, but it's setting up, then, I'm going to take that with half size. I'm going to say, okay, I'm going to take that with half size. I am going to see where the flush goes. I'm going to use my judgment and say, hey, this is no longer a flush. This is absolutely just going against me for a stop position. And because it's half size, I kind of can get away with that a little bit more. And if I see a flush, then I'll have the trade on and put the whole position then under there. Now, it slightly ruins the risk-order ratio, but I think it's still acceptable. So, going back to the initial point, what are the conditions? For me, it's like the volatility of the day, the range of the day so far, where we are in the price position, all the bread and butter stuff, the overnight range if you're trading one of the indices, have you got any news come out, etc. If those are lacking and those don't indicate range expansion, then I'll probably say, okay, well, maybe you're going to have to just try and finesse that as much as you can. See if you can spot the supply-demand imbalance shift on the tape around that level and not specifically look for a flush lower and play that game. But I'm always going to be wanting that, always prefer to see that. But sometimes it starts to become evident that's unlikely to happen. The other thing is if we have a higher low. Now, I just don't take these guys. I know some people love these, but I just don't take them because I can't find a good structured place to take them under most conditions. So in other words, if we come down lower, come back up and we do, this is a bad draw, and we come back and we do that. So we've got that higher low. And I know people find that's bullish and that's great. But for me, trying to find that point is I find it hard. I prefer to look at the low, see how it responds. Does it hold? Does it flush through? When I see this, it's still valid, but for me, I need to see a little bit further. Maybe I'm going to start to take that, a flag above that level, and look for a higher support rather than seeing the reversal. So this is off topic, guys, and kind of we're going on a separate theme here. But going back to the initial point, waiting for the flush or go all in now, depending on the conditions you've got, feel the conditions, see what the conditions are like. What type of trader are you? Do you have the ability to take half of a position, see how it goes? Or do you want to be strict? And I would be absolutely fine with you saying, hey, I just want to wait for the flush. I want to wait for the flush because it defines a trade. If I don't get it, I'm not going to trade it. And I think that's probably the default, should be the default setting for most traders. You can start to add a little bit more of these in, maybe the odd one or two under specific conditions. But if you're not getting them, you're not getting them. You can't force your will onto the market. That's in a perfect world, you get that. In a non-imperfect world, you get that. Is it still tradable? Yes, it is. You just have to adjust the parameters, adjust your expectations a little bit, and decide whether you're going to sit through the flush, potential flush, and have a wider stop, or come out into the flush, revisit, or just not even trade it at all and say, hey, I staked my flag on it doing this. It did the other thing. Fine. I'll take my medicine. I'll take my stop. I'll wait for the next trade to set up. All right, guys, wait for the flush or go all in now. Let me know your thoughts on that in the comment section below. See you next one, guys. Take care. Bye-bye.